All right, how many traders out there watching this today are actually struggling trading supply and demand because they are having a hard time depicting which zones when it comes to, high probability or low probability to trade from? I've talked about this in multiple videos about, first you got to be able to understand market structure. You have to be able to see the flow of the market to understand really which direction you should be trading. Is the market making higher highs and higher lows, or lower lows and lower highs? Is it also in a wedge? You have to be able to see things like this so you can determine, which direction first you should be trading, and if a zone is going to be valid enough for you to trade from. Now, in speaking with that, one, I talk about this in multiple videos, prioritizing, setups and referencing, are they high probability or low probability? I want to talk about why most trades fail when it comes to trading supply and demand zones. All right. Now, for starters, what you need to identify is if we are in a bearish trend or bullish trend. All right. Into the close of yesterday's session, yesterday was a bearish day. You should have been already understanding and knowing that the market just made a big structural shift or change when it broke below this low right here. From the 16th of October, the market pulled back here, played around range 17th through October the 22nd, and then we just dumped, breaking a major low here and then pushing lower. Now, if you look below you, there was an untested gap zone resting right here from October the 8th. I talked about that in yesterday's video. If you haven't watched that, please watch it. But the market on this particular day here, if you notice, when it pushed up here, it broke structure above these highs right here. So this is a valid or legit demand zone resting right here that I noticed yesterday towards the close of yesterday's trading session. I do not primarily trade the afternoon session. Nothing wrong with it. Yes, you can find good setups. Maybe you can't catch any pre-market or New York session trades in the morning, but you may have time to trade in the afternoon. There's still opportunity to trade in the afternoon. I focus on looking for one good setup, max two, and I'm done for the day. And I like to trade and be done by 10:30, 11 o'clock. Now, and that's part of my trading plan. I try to stick with that schedule. A part of a rule for myself. Now, this was a valid demand zone resting down here, and it was a nice ride back up to the upside. But what I was focusing in on, and I had already marked this zone up here, but there was one here and one down here just as well. These are high probability supply zones. Okay, why? Because this is where you need to understand what's going on. If the market is breaking structure lower, okay, and where it's taking out structure here, structure below this area here, we broke down and we tapped into this demand zone right here. We have broke multiple areas of structure, especially a major structure break or shift to the downside after breaking this low right here. Then your mind should be looking for opportunities to go short. We haven't broken any structure back to the upside on this pullback right here. Now we're tapping into this area here where there are some supply zones for us to sell, because our minds should be focused in on selling. And that's what happens with a lot of traders. They get trapped in just looking for, specifically, you could have taken this long down here because this happened a few days ago, and it was a valid demand zone because it hadn't been tapped into, okay? And there's a gap resting at it. The gap, the imbalance, resting back at the inside or at a zone marks up for the, the making of a good a trade to actually take. But you got to get confirmation and rejection, right? That's what the lower time frame or lower base chart comes into play, to scale down and look for a more precise entry point. But my mind at this point, after seeing structure being broken to the downside, is bearish. Again, you could take it as long right here, but still be mindful that we are more bearish. Well, we are bearish more than anything, okay? But if you look to see, as we climb back higher, there are multiple areas to take supply setups from. So I waited until today's session to see what the market would actually do. This pullback right here into the opening of yesterday's session, this was a supply area right here, okay? And it reacted at it. It also reacted at this zone right here. So even if you took a trade somewhere in this area here at where it tapped back into at 342, 20,342, it came all the way down to 20,305. Opportunity to scalp if you could actually find a zone inside that zone. Now, this is a high probability zone because this right here, this is a swing with a gap attached to it that help break this actual low right here, as well as this is actually a structure break right here to the downside within this larger swing. So there are multiple areas to look for supply setups to take a trade going back what? Going back short. Now, trading into the Asian session can be kind of dangerous, especially trading the indices, because you really don't have the volume there within that market. You know, when you get into the Asian session, you may want to kind of convert and start looking over to maybe some commodities, maybe gold. Gold's a good market, okay? But in London to, pre-market to the New York session actually open, good volume starts to really come in, especially dealing with the indices. That's where you start to see a lot of volume come in to where you can trade. But I'm not up at 3 o'clock in the morning trading the London session. But so I waited until the market opened up this morning. Yeah, we had news at 8:30, so I waited, but I saw where it's tapping into this beautiful area of supply resting above here. There's a gap right here. And the reason why a lot of trades that actually fail for most traders when it comes to supply and demand, a lot of people are taking trades that are not high probability zones. That means where there's a gap at the zone, basically an imbalance resting back at the zone. There is a definite imbalance right here. You see the bottom portion of that bullish candle there, the wick of it? This candle here, the second candle broke it, third candle formed, it came back right here, but there's a very small gap there, probably, let's see how many points. Probably 2 or 3 points right there on this higher base chart that the market still has to fill. You have to understand the market has to fill every void, every small gap, okay, in between candles at some point, maybe not immediately, because you can see right here, when it broke lower and made its bearish activity, it took it from yesterday's trading session around 2:30 all the way up until about 8:30, 8:45 this morning for it actually get back to the zone and then react at it. So when it got there, I was all on top of it. I was in front of my charts. I was looking at it. I said, it's got a gap. It's got a break of structure, a beautiful break of structure where it broke down. I mean, you can see it clear as day. Came lower, boom, made a high, came back, break structure, lots of structure in between. I was looking for that. And when it came back to this area, I said, looking above, there's no additional gaps to actually fill. Now, one thing about sizing up zones, okay? Can it react here? Yes. Can it react here? Yes. Can it react here? Yes. That's the thing about trading high probability setups is if you have multiple ones, you have to understand the market can react at each and every one of them, all right? The key to it is to understand which one should I wait for. Well, we really don't know as retail traders which one is going to actually give us the biggest push. We don't never know that, but we can only take trades based on, are there multiple means of confluence that work out in our favor? Especially right here, there was a gap here. Yes, if you move down to your lower base chart, you have it marked up here. Was there a smaller supply zone within this zone if you marked it up? So let's say if this was the high probability zone right here, I have it marked up. Oops. You would then go down to your 24 range chart, which I have talked about in multiple videos to see, is there on the 24 range chart a supply zone, okay, meaning a area of supply resting on the larger 120 range zone? Is there one on the 24 range chart? We're just scaling down, moving down to a lower base chart to find more confluence for us to get us into the trade. That's what it's about. More confluence, more it sets us up for the trade working out. Just as well right here. You can see that each one of these spots the market reacted. But it wasn't up until this last one right here that the market actually, this last zone right here, that the market actually reacted big and pushes way back down, all the way back to the VWAP and below, looking to fill some of these additional gaps to the downside. So in this case here, if you have multiple zones above you, meaning there's multiple gaps above that the market still has to fill, or multiple supply zones, you have to be, you can wait to see if it's going to come back up here, but you may miss your opportunity because it could react here and push lower and then at some point come back. We just never know. So we have to react and take trades if we see things setting up with that, with as much confluence as we can get. If there's a zone within here, I'm going to take it. It comes back up here. If there's another zone resting on the inside of here that gives me confluence just as well, and there's a lower base zone inside of this zone, I'm going to take that as well. So that's just the thing about trading, that we have to kind of determine which setup or zones are we going to actually trade from. But again, because we are bearish, I'm looking for bearish setups. But this was the power play for the day right here around 840, 845 rejection. If you move down to a lower base chart, you're going to see here that let's go to the right. So first of all, we identified on the higher base that there is a high probability zone there with the gap right there. That's the thing we want to identify first on our higher chart. Mark the zone. And then we look here to the left to see, is there a zone, a smaller zone on our lower base chart where we scale down to inside the zone, right? Well, Inside the zone, there is a, let's see how far this thing came back up to. I forgot. Right here at 428, 20,428. Okay, so inside this zone here, I'll blow it up a little bit so we can see it. Oops, let me move down some more. All right, so yes, there is a unmitigated zone here, or where there's a gap at right here, back in this area here. But the market came back up in here and tapped this zone right here around 428 and moved lower. Now, this is a lower probability setup, or a lower probability zone within this higher base zone, but still, you have to understand this. The market, even though it tapped into a lower probability zone, the 24 range chart, okay, this is low probability, but the higher base chart, we've tapped into a major high probability zone where there's a gap at. There's a gap here, that's what makes it high probability, versus the one being here where there is no gap at. You see this candle right here, this bearish candle right here where it broke below this bottom and this bullish candle right here. The third candle here came back and wicked back up and closed any means of the zone right there, okay, where there's no gap at. And there's no gap resistance right here, so it makes it low probability. Can the market still react there? Yes, but we still have confluence. The higher probabilities, or the higher base zone, there's a gap there. That's the first and most important part to this actual strategy right here, is that the higher base chart is giving us the signal, okay? It's high probability. There is a gap there. So if we tap into a low probability zone, and then, you know, as we move to the right, and we see it reacting here, and you can see it right here, it reacted here, pushed down, came back. This is a double top here. It's building a resistance at the top. You can either take the trade here or wait for a pullback. It's more confirmation at that low probability zone. So we've got a high probability zone on the higher base chart, the 120, low probability zone, which is still valid. You can take a trade from, because we got high probability off the higher base chart. So low probability on the 24 range chart inside the zone, and then we got resistance building up right here. You can wait to take the break of the candle here, and boom, it moves to the downside. First, what are we looking for? You could put your stop goes above this area right here. So, you know, somewhere above 427, give it a few points, because they love to come back and test the area in most instances, and it goes to the downside. Look to pick up your first 20, you know, scale out or scale most your position off, and then maybe, you know, if you got a runner, let the last contract run and move each time the market makes a lower high, a lower high, you can move your stop accordingly. Right here, boom, comes down, pulls back, breaks lower right here, okay? And eventually it's going to pull back probably right here and stop you out. So if you got into this trade, say around 416, right, and took off, say if you got, let's just say you got 2 contracts on, and you picked up your first, what did I say? I'm sorry. 416, you're going to take most of, where are we at? Gosh, I lost my space now. 416. And then it comes down here to 396. Okay, 396. That's your 20 points, and then it comes even lower. Your stop's gonna be resting right here. So you took a motion, where you're taking your first contract off. If you got multiple contracts, say 3, take 2 off right here around that 96 area. Okay, and then the market comes even lower, and then it comes back and maybe, you know, stopped you out. You're still in profit because your stop is resting right here, versus where you got into the trade right here, which is break even. You're still in profit. You see what I'm saying? Lock in your profits. That's how you can scale behind or trail behind price as it's moving lower or to the upside, depending on the trade setup itself. But that's the reason why a lot of traders fail, is because they fail to wait for multiple areas of confluence that come together. So the more that's on your side, the better the trade is going to work out in your direction. Okay. Now, if this was a high probability zone, a low probability zone off the higher base chart, could it still work out if we have a high probability zone on the lower base chart? So I'm going to say that again. If we had a low probability zone, meaning on the 120, okay, and the gap was already filled here, but then we scale down and we've got a high probability zone on the inside of that 120 zone, could the trade work out? Yes, it can still work out. So either way, you know, it just, you're actually getting you're getting a higher sense of probability and chance when you got a high probability zone where the market's pulling back to that zone on a higher base chart, okay, where there's a gap at, understand, okay? But that's the reason why. So you want to be able to identify these gaps back at the zones. That is the important part of what I want you to take home today when it comes to trading supply and demand. This right here was the trade setup for today, okay? Now, if you got into this trade yesterday right here, this was a beautiful setup right here. And I believe, if I'm not mistaken, let me take a look here. This zone from yesterday where there was a demand set up down here, take a look at the lower base chart. There was on that higher base zone, on the higher base chart, that was a 120 demand zone right here, the big zone. There was an area of demand also resting on the 24 range. So that was the recipe for a good trade. Both you have gaps resting back at the zones off the higher base zone and the lower base zone. Okay, so if you took that trade yesterday afternoon, then you were golden. Okay, so that's what I want to talk about. Today is to identify why trades fail, especially if you're just trying to take trades directly off of one chart, and especially if there's no gap resting back at them, and especially if you're not understanding the structure of the market. You got to bring all these things into fold. It's a case by case scenario to where you have to have multiple rules in place. I need to follow rule 1, rule 2, rule 3. But at the top of it all, the pyramid, is you want to understand and identify the structure of the market. So please do yourself that to be able to put yourself in the position and knowing which direction you should be trading. That's all I want to share with you guys today. If you are an elite member and you haven't watched yesterday's video that I posted, please go and watch that video from yesterday. It was talking about the trade setup that I actually took yesterday. It was a great setup. If you're an elite member, you have direct access to it for all those. If you want to become an elite member, it's for a very inexpensive fee. It's only $6.99 a month. You get the trade breakdowns. There's tons of them already on there for the community to observe. I'm talking about months and months and months and months, probably going back over a year of trade breakdowns that you can watch. These are setups that I've taken and posted on the Discord, and they're setups that actually talk about the strategy as a whole, so that you can understand, why I'm taking these trade setups, what I'm looking for when it comes to market structure, where I'm looking to take profit at, the stop loss placement. It goes over the strategy for each one of these setups as a whole. So not only that, you get the video playlist as well as a great video that I cover on market structure for all those that are part of the elite membership. So if you're interested in becoming an elite member, the link is right down in the description portion of the video. You'll see 2 links. The first one's the Discord. The second one is where it says become an elite member. Click on that. 2 tiers will pop up. The second tier, which says for $6.99, that's the one you want to choose to become an elite member and gain direct access to all that additional private community video content. But outside of that, if you're not a current subscriber, please take the time to go ahead and click on the sub button now. Make sure to turn on all your post notifications so you don't miss any of the uploads. And last but not least, if you found value in the content in which I discussed today on this video, please click that like button right now. Take care and have a great rest of your day.